Focus. Ideate, innovate, enable.
Hello and welcome to another episode of Nse Fin Wiz powered by CNBC TV18. It's a chilly morning here as we've arrived to talk to the employees of Fortis Hospitals at their flagship facility, the Fortis Memorial Research Institute in Gurgaon. Fortis Healthcare is a leading integrated healthcare delivery service provider in India. The healthcare verticals of the company primarily comprise hospitals, diagnostics and daycare specialty facilities. Currently, the company operates its healthcare delivery services in India, Singapore, Dubai, Mauritius and Sri Lanka with 55 healthcare facilities. Fortis Memorial Research Institute, the flagship facility of Fortis Healthcare, is a multi-super specialty hospital with an enviable faculty, reputed clinicians, including super subspecialties and specialty nurses supported by cutting-edge technology. As a premium referral hospital, it endeavours to be the Mecca healthcare for Asia Pacific and beyond. Focusing on our theme for the series, Nse Fin Wiz visited Fortis Memorial Research Institute in Gurgaon to gauge thoughts and notions of the young employees on investments and financial planning.
So typically, the investment plans I go in for, I try and look that there is a minimal risk factor. One, I'm not very sure about other investment plans like bonds and shares, how to go about it. So I would definitely like to know a little more about them, explore and see how they work, what is the best way of investing more.
I would like to ask them about some mutual funds, because what I see, I have no, even the basic knowledge about that, because I'm not an avid investor. So would like to know about them as I might require it in the future.
I usually ask my friends, my family, my near and dear ones, whosoever is from finance background or whosoever has invested before. So I take their advice, and I do read some newspapers and magazines for that also. But a lot of things are not according to my knowledge, so that's the reason I prefer asking my near and dear ones more.
I think on whatever we invest, what would be safe and that would give us like maximum returns at the end of the day. That's what I'd like to know. I don't want to drown my money into investments that at the end of the day just go sour. So a safe investment tip.
I put my money in FDs, my PPF every year, and the NSEs. So at least I get the capital back, and over a period of time, if I leave that money there, it grows.
Well, we're now joined by our two very special experts, Feroz Aziz, who's the Executive Director at Anand Rathi Financial Services. Welcome to the show, Feroz. And we have Mr. Pankaj Matpal, who's a Certified Financial Planner and CEO and MD at Optima Money Managers. Welcome to the show, Pankaj. Pankaj, a quick question to you now. The stock markets, the Nifty has been hitting all times highs. It's been a really, people are calling it a bull run now. It is a bull run. This is when the retail investor gets really excited and they're like, now's the time to invest. And you'll always have a friend who will give you this advice that I invested this and now it's double, triple, quadruple. What should be the reaction of a retail investor? Someone maybe, let's assume, who's not entered the stock markets as yet.
See, every time is good time. So if people have not invested when a market was at a lower level, so now also they can enter, and they should not wait for that. Sometime the time will come back where we were in 2009. But actually, if you see, always when there is sale somewhere, we always buy more when anywhere, online, offline, in the shopping mall. But when it comes to equity market, people usually buy when the markets are at peak. When market came to 1/4 or 1/3 of the peak, that time nobody was buying the equity market. Had you bought that time, it would have been much better. But still, now thinking that those levels will come again and then you would wait, that may not happen. So that is why start investing, remain invested for longer term. That is the only solution.
So, Feroz, the counter to this, which, Pankaj said makes total sense, but the counter argument always is that, so today it's at a high, tomorrow it'll be, how long will it be before it reaches a new high for me to make money? How do you counter that argument of what people say?
Investing is not just about stock markets.
Right.
Investing is about different assets. Okay, you don't invest a large portion of your money anyways in one of the assets. So there are different assets, like there's gold, there's real estate, there's debt market, there is equity market. Everybody actually concludes and they think it is synonymous, investing equals stock market. It's not like that. Now coming back to how do I counter that argument saying that the markets are higher, when will they get even higher, that's when I'll make money. The whole point is, if you go back in history and see that if somebody had the patience to invest for long periods of time, you would always, if you actually invested and stayed invested in a good mutual fund, using to getting into equity, in 5 years' time, any day, even if you would have bought it at the maximum levels, in 5 years you would have almost on every day, you would have got a better return than a fixed deposit on any given day. Even if you would have bought it on the peak day or the trough day, and if you had the patience of investing for 4 to 5 years, actually 5 years to be precise, you would have always made more money than a fixed deposit. When generally people have the time, 4 or 5 years, so if you have the time, the peaks and the troughs will actually ease out. So you should not be too bothered, and don't look at the newspapers too much, because they are distractions for personal finance. Right? To traders, that information is very relevant for somebody who's buying today and selling it 3 days later. That's very relevant information. For a person who's buying it today and has the patience for 5 years, it's absolute distraction. So as much as you ignore, the better it is for you.
Pankaj, Firoz spoke about mutual funds. So if you could just, in a short way, just tell us what exactly is a mutual fund and why is it beneficial for a retail investor?
Very good. See, first thing, mutual fund is a trust where that they pool money from different investors and invest in a portfolio of securities, I'll say. It may be equity, debt products or gold, depending on the objective of that scheme. Now, the only thing, whenever we say mutual fund, first thing, people react to that like, you want to invest in equity? Yes, I invest in mutual fund. So mutual fund is not limited to equity. See, when we talk about asset classes, it may be equity, debt, or precious metal, especially we have gold mutual fund in India. So this mutual fund is a vehicle to invest in those asset classes. So like if you want to invest in debt, you have choice to invest in fixed deposit or any other debt paper. But when we invest in debt mutual fund, the money goes in a similar kind of product like bond, debenture, certificate deposit, government securities. So it's a vehicle. Same like you want to invest in equity, you have choice to invest in direct share. But if you do not have knowledge and time or access to research, in that case you can invest through equity mutual fund. Similarly, if you want to invest in gold, you have gold mutual fund where your money is invested in indirectly in physical gold. So that is why mutual fund is the investment vehicle to invest in different asset classes. So once you decide that like you want to invest for longer term and you want to invest in equity, you can choose equity mutual fund. You want to invest for a very short period, you can invest in some liquid fund, then some bond funds or income funds. If you want to invest for some, say, 4 or 5 years, you can go for balanced fund. So you have different choices to invest. So mutual fund is not equity. Equity is one type of mutual fund, but mutual fund, if I say, is a vehicle to invest in these asset classes.
Firoz, when you go in ahead to invest in a mutual fund, the government has put out some rules where it's color coded. So there is a blue code, there's brown. So what are these color codes and how are they helpful for a layman investor?
See, before we get into product selection, first you have to understand more. Now, first mutual fund, like Pankaj was mentioning. See, mutual fund is sharing some doctor, investment doctor, right? Would it ever be possible for a patient to hire a doctor and say that I will be your only patient? It's unaffordable, right? Similarly, there are a lot of patients who share a doctor, right? Similarly, when there is an investment doctor, quite a few people who have smaller amounts of monies pull it in and give the responsibility to one person who is smart enough to manage everybody's money. Right? Because everybody does not have the acumen to manage their own money. So you actually outsource the money management to somebody. And there are lakhs of people using one person after pulling it. So that's a mutual fund, right? It's very important to understand a mutual fund, like Pankaj mentioned, has a very diverse risk and return profile. There could be a mutual fund where there is no risk whatsoever. Okay, in terms of you investing for 2 days, 3 days. So there are funds which are available where you can park your money on a Friday and take back your money on a Tuesday and get whatever 6-7% return on it. So that's practically, in practical purposes, low risk, right? But there are funds which are aiming to generate 18-20%, right? So there are different color codes to identify what is the risk in terms of the objective, right? So that's called the color coding.
You're watching Nse Fin Wiz, powered by CNBC TV 18. It's time for a very short break. Don't go anywhere. We'll be right back.